Hey, good morning, everyone. It's Edna. Sorry for being late here this morning. We were trying to go live in the joint venture secret group, and we were just having a hard time getting that to happen this morning. So Chandel is helping me out here, and so she's going to give you guys the link to find me. For people who are watching the recording, it's not going to be an issue for you. It's just the people who are trying to join us live. So thanks very much, and sorry about the challenge. So you know what, you can still do this this Facebook Live stuff even if you're challenged. So that's how we roll. You know what, we just have to make things happen. So what we're going to do today is we are on day 2 of the 5-day challenge. Let's get a deal under contract. So a lot of people think that to get a deal under contract that they need to know absolutely everything about the building. You do not. As a matter of fact, if you're looking and have any semblance of idea, one of the things to think about is the biggest thing to do is get the property under contract. Ask your realtor, what will it take to get the property under contract? It might be full price. Now's not the time you're going to negotiate. What you're going to do is you're going to write the offer, even if it's full price. Remember, you have right up till the day you remove conditions to change your offer. And especially with apartment buildings, you guys, if you actually ask a realtor to take you to an apartment building and show it to you, they will know right away that you're a newbie. So what you need to do is, and we're going to give you some scripts for this, but what you need to do is ask for the financials on an apartment building. I want to see the financials. That's your profit and loss statement and your rent roll. You can get most of your information from that. If the property's listed on MLS, the rest of the stuff should be on there. So what you're asking for is the financials. You can make an offer based on the financials. You don't need a whole lot more information. Like I said, you don't have to put a deposit down until your offer is accepted. Once it's accepted, you even still have 24 hours to do that. So don't let that stop you. The biggest thing you're going to learn by going through these exercises is that it's not that hard to get a property under contract. A little bit harder to close on it, but we're going to give you some ideas on how to do that today. So today the challengers will receive the Find the Money worksheet and 50 ways to afford something right now. There are going to be downloads in your section, in your member section, and it's going to come in a detailed email right after we're done here. It's all about finding the money and joint venture partnerships today. So last night we had some questions in the Facebook group. So I'm going to answer those very first of all, okay? So Jose says, how much money do you need to begin? So my answer is none. Is it easier if you have money? Absolutely, it's easier. But people want to know how to do deals with none of their own money. So that's what I'm going to teach you. What you can do, and I have students right in this group that have already done this. Reach out to Rob Parkman if you want to know somebody who's done it very, very, very recently. So what we teach people is get your property under contract and go to your investor and offer them a special part of the deal if they give you the money for the deposit on the offer. Got that? Does that make sense? So Rob did that. He got his first person. He gave them extra percentage of the deal because he was their first person. Now that investor, if that deal doesn't go through, that investor fully gets their money back. So don't worry about that. And then with an apartment, we usually ask for 90 to 120 days to close on it. So that's when you have time to be raising capital and looking for investors. So now, here's the absolute truth is you don't need your money. You need somebody's money, but you don't need your money. And you know, we have done deals with no money in the transaction. So know also that that can be done. It just takes a little while longer. Savannah's saying, so how do we find investors? You know what? We're going to cover that this morning in the Find the Money worksheet. And I'm going to talk about how we find investors. But I do want to do the questions first. So Rob says, how do you deal with a seller who's eccentric and vacillates in terms of whether he wants to do the deal or not? It's an off-market deal brought by a realtor. What I would do is I'd put my offer in writing and make it what you really want to pay or not. It doesn't matter. It's still negotiable right up till the day you remove conditions. If you put the number in front of him and actually get talking to him, if he's asking for $1 million, write down $1 million on the offer. Get the conversation started. You're not going to get the conversation started till you put it in writing. And lots of people do a lot of work on a property, never have it under contract, and then all their work is for nothing. So just get the offer in, okay? And if he still vacillates, then walk away, because he's obviously just testing the market. Lots of people do that. They're testing the market to see if there's anybody out there willing to pay their price. And sometimes it's a stupid price, and sometimes you can make that offer right off top, and then actually get into the nitty-gritty and let them know why that number is not reasonable. You know, they might be offering that money as if they're, or the value, the price, as if their building's 100% full, but it's not. So you get to reduce the asking price based on what the numbers are in that building. Graham says, what are the most important factors to you when analyzing a property? Example, location, condition, price, amenities, public transportation, etc. I was looking this morning when I seen that question, I was looking for something that I use all the time, and it's called the RAIN Property Scorecard. And if I can find the link to that, I'm going to send it for you. But all of these things are considered in there. One of the biggest things you want to do is be close to public transportation. Now, if you're buying in a small town, it's different, but you want to know the vacancy rate, you want to know the cap rate, and your realtor should be able to answer you what the cap rate is in the area. You want to know the type of tenants, the tenant profile that's attracted to that area. And you want to know what rents are already happening in that area. And a good place to check that out is Kijiji. Just go and look for places to rent in that area and see what they're renting at. And if I can find you that scorecard, or if you even go to the RAIN Canada site and see if you can get it, it is a great scorecard. But in the meantime, I will see if I can find it for you. John says, when using equity in your home to purchase a property that's underperforming, where does the money come from for the renovations required to renovate to bring it up to proper standards? Well, you know what? If you're using the equity from your own home, take enough out for the renovations. It's a write-off to you. If you borrow money to invest in a real estate investment, it's tax deductible. And then the other way is raise the capital, give some of the return to your investor. And that's another good way. And they can use equity out of their home to do that too, or cash. Okay, Ken says, unfortunately, I learned from my mistakes, so be sure to share what to avoid doing or real estate investing mistakes. Okay, first mistake people try to do is go everything alone. It is so hard, especially when you're beginning, to go it alone. You need to find people who are like-minded people. So if you've got a local real estate investment group, join it. Get to learn from them. They have speakers that come out every month and they put on stuff, and it's almost free. Like ours is $50 a meeting, and it's absolutely amazing information. So that's an idea. And the first time out is free. A person has to start putting money away for their education to get better at this. You can read every book under the sun, but until you start taking action, preferably action with somebody knowledgeable holding your hand, then you're not going to get anywhere. So what are some mistakes to avoid? Overpaying. Not knowing how to analyze your numbers is another one. Another one, if you're wanting to grow to be a large investor, another big one, I always say, is Get property management right away. And even if you choose to manage your properties at the beginning to save yourself $100 or $200, know that it's going to limit your growth. It is a good place to start. It's good for you to know, so you know what you want your property managers to do, but it will limit your growth long term. So property management is a must. Are they perfect? Absolutely not. You have to stay on top of them. It's like any business. You can't just say, here, manager, go do your stuff, and never stay on top of them. You have to stay on top of them. You have to question if they're getting top rents. You have to question what the repairs and maintenance are being done. And you question why tenants are moving out, all that kind of stuff. You question everything. So just so you know, those are some of the mistakes to avoid. Analyzing deals and not knowing your areas in your city are another big one. Talk to my students, Tyler and Bailey. When they first decided to buy a building, they actually went into the hood and they were going to do a fix and flip. Hey, we all hear about fix and flips on the TV. It looks so easy, right? Well, one of the partners said to the other, well, let's go. I was told that if you're thinking of buying in a neighborhood, you should go back in the evening and at night and see what it feels like. They were so scared they wouldn't even get out of their vehicle. They knew then not to make that purchase. So they came and started taking some education, and they learned how to raise capital, how to talk to investors. And a few months later, they had a almost new 12-unit apartment building under contract with none of their own money. So it absolutely works. What people do you need on your power team? We're going to talk more about that later, but right now, the only person you need on your power team is your realtor. Get hold of a realtor and get an offer made. Everything else comes after. People who will be on your power team are mortgage brokers, inspectors, appraisers, business coach. That's a power team member. They can help you walk through what you need to do. An accountant, a lawyer, those are all power team members. So that's basis. But right now, just the realtor. When looking for financing for an apartment, who's best? Big bank, credit union, or mortgage broker? I met a broker, and for commercial, they charge a percentage fee of the loan also. Is that pretty standard, or only brokers do that? When you're dealing with commercial, you are probably going to have a fee most of the time. It is part of the money you're going to need to raise from your investors. So yes, it is standard. Personally, I like dealing with mortgage brokers because they can find me the best deal. I find that credit unions might be a little bit more flexible, but you're going to pay a good 1.5%, probably higher than you'll pay if you get a mortgage broker shopping around for you. Big banks, again, depends on the relationship you have with them, but definitely shop around. I find that mortgage brokers only get paid if they get the deal done. Your big bank has employees that get paid no matter what. And if they look at what you're doing and they look at it as too much work, there's a good chance they're going to just set it to the side and do the easy stuff. I mean, they're getting their salary. Do they get any commission for doing anything extra? Not all the time. Mortgage broker only gets paid if they get the deal done. So that's another thing to think of. Chris asks, do you look at city assessments when you're analyzing a deal? You know what? I don't, because they're usually behind. The city assessments are usually behind. They're not close. Right now, they're just in the process of updating the assessments in our area. So they went from really low to really high. And so again, I don't put much in that. How to properly use comparables. Again, when you're dealing with single family homes, you have to use comparables. Talk to your realtor. Have a realtor. Realtors only get paid if they get a deal done. So don't use them and then go buy something else. Make sure your realtor gets paid. They get paid by the seller, not by you, the buyer. Let them make some money. If you let them make some money, they don't mind dealing with you. But if you want them to do all that work and don't let them get paid, like say they do all the work and then you go to a cousin who's a realtor because you want to feed their family, guess what? That realtor won't do any more work for you. They have to be paid, but they don't have to be paid from you. What's the best way to find private leads, and how do you pay bird dogs, wholesalers, fixed amount or percentage? All of that depends on the deal. We find that bird doggers are really just a person that points out, hey, that house is vacant, it's boarded up, go see what you can do with it. That's maybe a $200 or $100 or $500 if it turns out to be a really good deal. And you only pay them if the deal actually goes through. Wholesalers, again, it depends what they've done for you. If you get a wholesale deal that comes to you and they've negotiated a 15% vendor take back, they've negotiated the price down $100,000 or a couple $100,000, all that stuff is worth money. So you decide. Now, if you're looking at wholesaling a deal, always be looking to keep, like, first of all, don't wholesale something that you don't know is a good deal. Because if you think just because you got a property under contract and someone else is going to pay you $5,000 to get that contract, doesn't always work. It has to make sense. You should have negotiated it down so that they more than make that $5,000 back from getting that deal from you. That sort of thing is what I'm looking for. So usually it's a fixed amount. Very seldom. I don't think I've ever paid a percentage. So hope that helps. Like I said, you're going to get an email today of your homework. A few of the things that I want to address today is some real estate myths. And I've seen some of this in the Facebook group. You need money and you need lots of money. So here's where the myth part clashes with the truth. You do need money. Does it need to be your own money? No. We have bought $47 million worth of property, and only the first 2 properties did we use equity out of our own home. And depends on which way you look at it. Is that my money or is that the bank's money? I like to look at it as that's the bank's money, because the bank gave me that money based on the equity of my home. If I sold my home, I would have got that in cash, but I didn't. I refinanced, took it out, paid 3% on it. That's how we bought our first 2 condos. We were able to refinance those first 2 condos within a year and pull our money out. So you can do that in some markets, not in all markets. So do you need money to get into real estate? Yes. Do you need your own money? No. And if you do agreements for sale, which, Google that to find classes in your area, but we're having Barry McGuire come to Regina, I'm sure May or June, and he's going to do a full day workshop on agreements for sale. Now, agreements for sale, a lot of times you can rescue somebody in trouble and get them out of their property with none of your own money. So know that. We've even heard of people getting paid to take the deal. And why that would happen is if they don't do something, they're going to go into foreclosure, and they would rather not have that over their head for the rest of their lives. So they're willing to give you a good deal while you rescue them. So yes, it absolutely happens. The one thing that you want to think about, because a lot of people think, well, why would people give me their money and not just do it themselves? Well, there are a lot of busy business people out there. They are too busy to learn what you're going to be learning. They don't have time. There's other people's in jobs who can't even make a Facebook Live at this time because their boss wouldn't let them. So you are going to learn about what it takes to be the active entrepreneur and get people to invest with you. You want to think as a real estate investor, are you wanting to be a passive investor where you supply the money in the mortgage so you can kick back and collect your return? Do you want to be a passive investor? Or do you want to be an active investor? And for the active investor, I actually don't call them an investor. I call them the entrepreneur, because they're the ones that are finding the deals, evaluating the properties, creating the contracts, and then managing the deals. Now, where your sweat equity comes in, because that's what it is. It's sweat equity. You don't just get to sit back once you have that property and collect money. For the first while, your investor gets all the money on the property while you're building your equity. So generally what we do with our apartment buildings is we plan a 5 to 7 year where we're running the building and not getting paid for it, or getting paid minimally for it, depending. And we build up our sweat equity so that in 5 to 7 years, when the building's refinanced and our investors are fully paid out, then we start collecting the cash flow. So if it's a classic 50-50 joint venture deal on an apartment building, for a first while, 100% of the cash flow goes to the investor. Once the investor's fully paid out, then you start getting 50% of the cash flow. So yes, sweat equity. So it's other people's money, but you have to build your value. That's your value, is you're going to manage that property for free. And that doesn't mean you have to be a property manager. So keep that in mind. In all our joint ventures, we actually put in there that we will hire a property manager. That's not our job as the investor. We can grow and scale, but not if we're managing day to day. We hire property management. So there are passive partners we set out to find in joint venture deals. Those are called our joint venture partners. We want them to sit back and collect their return. That's their job. They put in the money and they sit back. Now, in reality, we all would love to be that person. But if we don't have the money, guess where we start? We start on the other end of doing all the work. Now, I have had investors say to me, well, how does this work? So I'll show them. Well, you know what? The person managing the deal and qualifying for the mortgage and all that kind of stuff, they'll get, maybe 40-50% of the deal. You as investors will get 50% of the deal, and they'll get a small acquisition fee up front. That just allows them to keep reinvesting in themselves, reinvesting in getting properties and stuff like that, because there is some costs running around and stuff doing all that work ahead of time. So it's not where real estate entrepreneurs make all their money, though. They make all their money in managing the deal and holding it long term and getting to that point 3 to 5 years out, where then they start collecting the passive income as well. And the shortest time period we've ever done that in is 18 months. We bought 24 unit in Saskatoon, 23 2 bedrooms, one bedroom. And we bought it for $90,000 a door in, 2012, I believe. And we renovated it. So we put in all new cupboards, all new floorings, and then we increased the rent. And as we increased the rents, people moved out, and then we were able to renovate the next one and whatnot. So in 18 months, we had basically the whole building had turned around, and some tenants stayed, but they moved into the new suites because we wanted the suites all updated. And we were able to refinance that building at $150,000 a door. Our investors had all their money back in 18 months, and they still maintain their ownership. So what I always tell my investors is, you know what? We're always working really hard to get your money back to you as fast as possible. You know why? Because that's when we start to get paid. So it's win-win always. We'll always try to get your money back as fast as possible. Stuart here says, should we find investors first or property first? You know what? What I do is I always have, every time I get a chance to talk to an investor, I do, even if I don't have a deal. Because deals come to me every day, just about. They're not always deals that I want. Investors don't come every day. So I talk to them about what I have now. And if I don't have anything now, I talk to them about deals we've done, like one I was just telling you about. I tell them about what could be a best case scenario, like the 18-month refi. I tell them what could be the worst case scenario, which would be, you know what, we buy a $4 million building. In 25 years, that building is still worth $4 million. This is what I call my nightmare scenario. Because all the cash flow, all the money that the building made went to cover vacancy, repairs and maintenance and such like that. So we got no cash flow. But guess what? We would have raised $1 million. So the investors would have $1 million in on a $4 million building. And at the end of that 20-year period, like I said, absolutely worst case scenario, your building would be paid for. Where can you put in $1 million and get out $3 million in 20 years? Think about that. So I like to find the property first, but I'm always looking for investors, always. Then what I do is once I have the investors lined up and I get the deal, then I make the calls. Hey, I have a live deal now. Are you ready to move? And if I'm working on a live deal and somebody's slow in responding, I don't say right away, well, I usually always say in my emails, time's of the essence, we're closing on this building at the end of the month or whatever date we're actually closing because that's what we do. And if they don't get back to me soon enough, but they get back to me 2 weeks later and the building's actually already fully funded, I just keep talking to them as if it's not fully funded yet. And then I try to find out everything they're looking for, and then I let them know it's fully funded, but I'll put them on the list for the next deal that comes along. And they realize then that they have to move quickly when you have a deal. Does that make sense? Okay, so the lifeblood of working with other people's money is you get to use other people's money, but you don't get to just use it. You are providing a huge, huge value to these people. Lots of people should be invested in real estate. Right now, the stock markets are at all-time highs. I actually had a client of mine email me this morning and said, I got an email from my broker who deals with the stocks and mutual fund side of her portfolio, and he said, get 100% out of the market. The market is going to crash, and I need you 100% out of the market. So she gets hold of me and she goes, he wants me to move all my stuff too. And I go, your stuff isn't affected by the stock market. Plus, it's not liquid. You can't move it out. So they're scared about the market right now. So just got that news this morning. This guy's brilliant. I used to work with him. I believe him 100%. So if you guys have money in the stock market, get it on the sidelines because Robert Kiyosaki talked about all last year. 2016 was supposed to be the year of the big crash. Now it's kind of looking like it's going to be this year instead. So beware of that and be watching. And of course, talk to your financial advisor. If they're up on things, they probably be telling you the same things. So anyway, when you're working with other people's money, you're providing them a value of getting a great return on their money while investing in good, solid, safe real estate. Apartment buildings are one of the safest investments out there. Ask your banker, why will they lend you up to 85% of an apartment building if they didn't consider them one of the safest investments out there? Right up there with your own personal home. And as one of my clients said, and I absolutely love this, he was talking to his sister one day, and they had just taken possession of a $2.6 million building, and they had actually they had 85% financing on it because they had a vendor take back. And the sister said, oh my gosh, I couldn't sleep at night if I had that kind of mortgage. And the student said, well, think of it this way. He says, if one of my tenants fall down and break their leg and can't go to work, guess what? He can't pay his rent. I move him out and I move somebody else in who can. If something happens at your house, your husband falls down and breaks his leg, can you move him out and move someone else in? So the answer, of course, is not likely. So the risk is less in apartment building. You know what? You've got 12, 18, 24 people paying off your mortgage. And if you have experienced some vacancy, and we always calculate whatever the going rate vacancy is in the building and stress test it up to 15% vacancy. Can we still make this building work? So those are some things that you need to know too. The unknown is the main reason that you'll discover how you have so much access to money partners. Many people you know right now have access to money, credit, RSPs that can be used to invest in real estate, but they don't know how to do it, or they just don't have time or the skill to do it. And that's where you come in. So you're going to be getting this morning a sheet I call Finding the Money Worksheet, and that's your challenge for day 2. This will be an exciting eye-opener for you because you're going to discover that there is money all around you. Go over the money worksheet. I don't think you've got it yet, but I'm going to go over it with you now. and just kind of give you an idea of how it works. So basically, and what I've done on the sheet is I put your mom and dad on there as an example. So let's use your mom as an example. Let's say she's 78 years old. So basically what we're looking at is she's probably got $5,000 in assets for every year she's over age 20. Now you're going to have this example in your worksheet, so you don't have to remember this. So in this case, she's 78 years old, so we figure that she's got $290,000. Now, if your mother's a professional, times that by 3. If she's a business owner, times it by 2. So that's the original number. So in this case, our original number is 290,000. So this woman's a business owner, times that by 2, that's 580,000. Is this rocket science? Does it work every single time? Absolutely not. But it works more times than you could ever be aware of. If that woman has sold her business, then 10 times that, and that would be worth $2.9 million. Okay, see that? Now, most people have a line of credit at least of $10,000. So add that in too. And then if they've owned a house, for every 5 years that they've owned a house, add in 50,000 on top of that. So in this case, this mother is worth $3.5 million. Now, what if it's your brother who's 20 years old? Well, you know what? He probably has access to a line of credit. What if it's your aunt that's 50 years old? Well, work out those numbers. That's how you come up with the people around you and what kind of money they could have. One of my students went to his Facebook page and he used this analyzer on every one of the people on there. He come up with like $17 million. Now, does that mean every one of those people will invest with you? No, but you know what? That's where we start. So one of the things that we're asking you to do is when you get done your Find the Money worksheet, and I don't want you to stop till you have at least $1 million, but keep working on it. Keep it on your desk every single day and keep thinking of people. And you know what? Even if it's somebody you don't like, write his name down anyway. Does that mean that you're going to get hold of him? No, because you don't want to have an investor who you already don't like. But what it might trigger in your mind is somebody else that you know through that person who you do like. Okay, so that's another really big key is don't take somebody's money who you don't like, because it'll come back to bite you in the butt in the long run. And you have to deal with them for as long as you're on that building together. So make sure it's people that you can deal with and you don't mind giving them your 50% of the share of the deal. If you're going to be irritated every day by having to dish out that cash flow check, not a good partner for you. And I'm not sure if I'm saying your name right, R-A-E-D, but if it's Raid, do you suggest to concentrate on wholesaling first to get your feet wet? I do not. It is just as hard to learn how to wholesale a building as it is to get it under contract and keep it yourself. So what you can do though is just do whatever you can to learn. If it's wholesaling, go ahead, get your feet wet doing that. Do know that you can actually wholesale apartment buildings too. So you don't have to start small, which is another thing that I want to share with you. So let me go back. So that's your Find the Money worksheet. You're probably going to have questions as you go through it, but start going through it and then ask your questions in the Facebook group because we'll answer them for everybody. So just remember the formulas across the top. It gives you the instructions in there. Start working on it. Get your $1 million. So one of the questions people are asking is, where can people go to meet these people? Well, you know what? I highly recommend that you start with the people you know. And like I said, it could be somebody you know that has lots of money, but you don't like them. Well, write their name down anyway. It's called, I used to, when I started out in sales as a financial advisor, they used to call that a memory jogger. You might get them sometimes if you buy life insurance. They ask you, who do you know that you could refer to me? Think about that. Just write names down randomly and then use the spreadsheet to figure out what they could possibly be worth. And then, like I said, you'll be surprised. People are worth more. And of course, there's always people who aren't worth anything, and they'll usually tell you that right off the top. But a lot of people think they have no money and will tell you that because nobody ever has money just sitting there. We show people how they can get equity out of their house. Give me 1 second. Sorry, I'm on Facebook Live. Just check. I'm not sure if I need some there. Thanks. Sorry about that. My water guy's at the door and I had to let him know I needed water. Okay, perfect. Okay, what was I saying next? Go with people that you know already. And then from there, there's something that you learn called an elevator pitch that gives you a chance to now connect with people you don't know. So when people who you just meet say, well, what do you do? I know my answer is I help people create passive income through real estate. So that sometimes creates curiosity. Well, how do you do that? You know, so you want to come up with something short and quick that you can tell people about what you're doing. If your day job is that you're a truck driver, you can talk about how my day job's a truck driver, but right now I'm learning to invest in real estate. And when you start out, don't be selling people. Just tell them what you're doing, share with them what you're doing. And some people will just say, hey, you know what? I'm interested in that. Now, one thing I'm going to point out, and I had this back at the beginning, but when I said earlier, how much money do you need to begin? And I said none. Is it easier if you have some money? Absolutely. So you can find your own money. Do you have equity in your own home? Do you have money in mutual funds, in cash mutual funds? You could do RSP second mortgages too. So know that too, and you can get a really decent rate of return on it. So there's different ways to get into real estate. Now, if you're a person who has a history of screwing your friends and people you've done business with in the past, guess what? It is going to be extremely hard for you to get investor money because first of all, you know what you've done, and you'll have that mind block there. If you've been not truthful, you don't have integrity, your friends, your family will know that about you. So yeah, it may not be the best place to start. So if you have a history of not doing well in your life, it is going to be harder for you to find investors. Is it impossible? No. You just have to work harder at it. You have to work longer at it, and you have to get better. One of the first things that I tell people it starts with is integrity, and that's personal integrity. Do what you say you're going to do. So if you meet someone at a cocktail party or at a networking event and you say, I'm going to call you tomorrow and take you for coffee because I really want to know more about you, what you're doing, and you don't call, guess what? That's lack of integrity. If you call 3 days later, they're going to go, you said tomorrow. I know that kind of stuff sticks in my head. So know that. Now, if something comes up, your child's at the hospital, on the way there, do a quick call and say, you know what, sorry, something's come up. I'm heading to the hospital with my kid. I'll call you tomorrow or whenever you call. I'll call you as soon as I'm past this crisis. But do what you say you're going to do, including what you say to yourself you're going to do. So when you joined this 5-day challenge and you said, I'm going to go through this 5-day challenge and I'm going to get a property under contract, do it. That's the best thing you can do for your confidence, is to follow through on something that you tell yourself you're going to do. Is it going to be easy? No, I never said it was going to be easy. But if you can get a property under contract in 5 days, you can do anything. So just know that. A lot of people are stopped by what goes on up here. Like I said yesterday, whether you think you can or think you can't, you're right. And what you need to do, what you need to know when you're being a real estate entrepreneur is you have to provide value to your investor. Are they going to just invest with you so they can make you money? No. You have to make them money. And if you're just starting out and you have no history, no because one of the people in the group mentioned, well, you know what, everybody wants $3,000 or whatever to join their group to be taught. And he was thinking that wasn't right. Well, you know what? I said, well, what you need an investor, but what do you give? Well, I would give 50% of my first 6 deals. Well, I asked some questions. I didn't see the answers yet, but some of the questions I would ask would be, what's your experience? What have you done for investors in the past? How much return have you showed them? Now, that is not a deal breaker because you don't have any experience. But what I teach people in my classes is analyze 100 deals. Because when you're done analyzing 100 deals, and when you've done this 5-day challenge, you're going to know how to analyze the deal. When you're done analyzing 100 deals, you're going to recognize a good deal. And you can show how you analyze those 100 deals even if you didn't actually get one. So that shows experience, even and tell the reason why you didn't get it. I couldn't raise the capital for it. I got it under contract, and then after I went through my due diligence period, I realized that they were asking way too much and they wouldn't go down in their price. I realized that the numbers that they originally gave me weren't correct. Because that's what else you have to do. So even though the numbers they give you and they analyze properly, well, what could happen is when you actually go through the numbers and get a signed rent roll, well, it could show you that they're 25% vacant and they're still asking the prices if they're 100% full. Well, those are some of the things that you can negotiate on after. I actually got a analyzation from one of my students the other day, and it was on, it was over 30 units. I can't remember exactly what it was, but in the analyzation, they had 167 a month for insurance. Well, I own apartment buildings. I own houses. I have a house that I pay $145 a month on a 2-door house, a duplex. And I pay almost, so I said right there, that's a red flag to me. Those numbers are not correct. Now, could they be correct for the seller? Possibly. If they got a whole slew of buildings, they would get a better rate than you. So know that even if that's an actual number for them, does not mean it's an actual number for you. So part of your due diligence is to get a quote on insurance of what you would pay. And I learned that the hard way. One of the first buildings we ever bought, we were told it would cost $2,400 a year for the insurance. And I went, oh, well, that's pretty good. Yeah, because it's economies of scale and all that kind of stuff. When I went to get insurance, it was actually $7,000. Oh, well, you should talk to my broker. And I talked to their broker, and it still didn't matter because I didn't have the scale that they did. So notice that and realize that. The other thing they had in there was property management at $312 a month. And I went right away, no, impossible. The lowest we've ever paid for property management is $1,200 a month, the lowest on a 27 unit. And this was over 30. So I knew that their numbers were off. What happens a lot of times, what they'll do is they'll tell you, oh, you don't need property management, you just do it yourself. But when you're analyzing those numbers, you put in the price for property management, because if you choose to do it yourself, which you may at the beginning, you want to be the one maybe that collects that $500 or $1,000 or $1,200 a month, that's fine. Just know that you want to have the money set aside to do that, so that when it's time, you can bring in a professional property manager. Okay, so the primary business model that we have, we never did get into fix and flips. Can it be lucrative? It can, but we didn't want another job. My husband and I both made really good money at what we were doing. We liked what we were doing, so we were never looking for a second job. And so we started with houses. We wanted our houses to be fully renovated too, and I understand that some people want to get in and build up the value in it. That totally makes sense. It wasn't us though, because we wanted properties that were, if they were 100% ready and we could take possession, start getting them to cash flow right away. That was better for us than working on them for 6 months and we made better money where we were working. So everybody's different, yes. Why are fix and flips so popular? Because we watch them on TV every day and it makes it look so easy. But you know what? It's not that easy. It's speculation. You don't know what you're going to find behind those walls when you get in. It could cost you a lot more money than you think of. And you know what? A lot of investors consider that higher risk too. So we find that investors actually like apartment buildings even better than houses, way better, because they're treated like a business. You can't get financing based on poor numbers. You can't. It's based on the net operating income. And so as you increase your rents and decrease your vacancy and increases the value of your building. So that's 100% different than houses, because houses, even duplexes, fourplexes, are all considered residential, and there's no forced appreciation there. So if you get $2,000 a month on a $100,000 house, they don't value your house based on that number. They value your house based on market comparables, what's sold in the neighborhood similar. With apartment buildings though, and again, it's not, if you're getting $2,000 a month, but market is $1,200, they're still going to only value it at $1,200. But as you increase your rents, the value of your building increases. So does as you decrease your expenses. So know that as well. We prefer to buy apartment buildings for many, many reasons. There's many different ways of getting paid in an apartment building too. Just cover off some of the different ways that I have here. So some of the ways that you can make money in an apartment building are equity earned in the purchase through negotiating. That's one way. Forced appreciation, as I just mentioned, through renovation, staging, cleaning, landscaping, design, marketing, and selling. Depreciation is another way. Leverage, of course, when the bank will fund 75 to 85% of your purchase, you don't have to come up with all that money. And sometimes you can get, come in. Sometimes you can get a vendor take back out of that deal too. Then there's cash flow and mortgage pay down as well. And mortgage pay down on an apartment building can be a lot of money per year, $30,000, $40,000. So remember before when I mentioned that you can have a worst case scenario in an apartment building where you be paid $4 million for it today, and it was 20 years later only worth $4 million? Give me 1 second. More people at my door. Anyway, mortgage pay down alone, which is really what your tenants are paying down your building, could be like 7% on your building. Mortgage pay down alone. And like I said, you're not paying it. It's not coming out of your pocket. Your tenants are paying it. So unless you're absolutely terrible at managing your buildings, you should be able to, at the very least, have a building that's still there at the end. So again, I'm just going to go through the finding the money exercise because I know some of you are just joining me. So you're going to get in the email today, you're going to get the find the money worksheet. You simply fill out the fields below, and we've already filled in one for an example. So the example is, Mrs. Example, we put your mom, age 78, $5,000 a year is any year over age 20, so it comes to $290,000. In this case, she's a business owner, so you times that by 2 because business owners are generally wealthier. And if they sold that business, you times it by 10. If they have a line of credit, just about anybody can get a line of credit, $10,000. If they're a professional, like a doctor, a lawyer, or such like that, they can lots of times have $100,000 line of credit. I know of people who've invested their line of credit while they went to school and came out debt free. And if they've owned a house for over 5 years, $50,000 a year in equity. So know that too. So that's another way to add that up. I want you to work on that till you have a minimum of $1 million. Don't stop. Stuart says, if someone has no access to money at all, how can they negotiate the earnest money deposit while looking for an investor? So Stuart, I did cover that a little bit earlier, but I will cover it again for the late arrivers. So what we do and what we have done and what I teach my students is get your investor to cover it and offer them a special return over and above what the other investors get in order to use their money. I've also advised students to borrow money and pay a little bit of interest on it while they're doing it. There's so many different ways that a person can do it. So don't give up on that. Like I said, when you make the offer, you don't need to put a deposit. You have 24 hours after the offer's accepted to come up with the money. So if you've got an offer accepted, go talk to your investor. Could be your mom, could be your dad. Just say, hey, I got this deal under contract. I'm going to give you a special rate if you're my first investor because I need the earnest money to put it down. And it's also what I'm being taught, to buy real estate with none of my own money. Even if you've got $10, $15, $100,000, challenge yourself to do this without any of your own money. And I know many of you won't. It's just there's a mind block that says you can't do it. Nobody would give you money. And just listen to some of that language that you're talking to yourself, because whether you think you can or think you can't, you're right. So if you can suspend that disbelief and just try it, and don't just try it 2 times, get rejected and say, oh, this doesn't work, because I know people, we did it ourselves. We have $47 million worth of real estate, and the only 2 properties we bought with our own money was equity. Some people actually consider that the bank's money. We like to consider it the bank's money, even though if I would have sold my house, I would have access to the money. I didn't want to sell my house, but we had equity in it. So we used the bank's money to buy our first 2 properties. And we also used it to take our education classes because, you know what, at the time I was a financial advisor selling mutual funds. All my money was tied up in mutual funds and the market wasn't doing good. I didn't want to take any money out. I have since taken out everything and put it in real estate, but at the time I didn't want to. So we wanted to see, one of our first classes we ever took was creative real estate investing. And that was my favorite class of all time. And when I seen that people were doing it, I knew that that was the way I wanted to build my portfolio. My background as a financial advisor helped, there's no doubt, but you can learn it too. So just know it's a learned skill, how to use investor money. One of my other students said, and if you ever get a chance to watch the video that Tyler and Bailey did, listen to them. They're brilliant young guys. And Bailey said, you know, one of the things you need to learn to do is you need to learn to invest in yourself if you're going to expect other people to invest in you. So if you've got $10,000, spend the money on investing and educating yourself, as opposed to going out and trying to buy a fix and flip and possibly losing every dime that you have. What's my time here? Just give me 1 second. I want to find out what time it is. Oh my gosh, I have been on here almost an hour. Anyway, tomorrow we're going to discuss how to effectively analyze a property. We'll go through the good ones and the bad ones and show you exactly how to look for a profitable deal. Now, one other thing I do want to do real quick with you today before I go is I've got a worksheet also that you're going to get today, and it's called 50 Ways to Afford Something Right Now. And this is what it says at the top. Most people use the excuse, I can't afford that, for not doing something different and really beneficial in their business or their life. But if you understand that when you ask for something, it's always given to you in the form of an opportunity, not a check in the mail, but an opportunity, you realize you can afford that thing. So the way for you to afford something is already in your life, something you haven't actioned yet. So instead of saying, I can't afford that, shift your mindset to say, how can I afford that? Language is so huge, everyone. And your mind will immediately shift to finding solutions that already exist. So we want you to write down 50 different ways. Yes, 50, not just 16 or 46. You can make money right now in your business. An opportunity you haven't said yes to, or in your personal life, house sitting, cooking classes. Nothing's too crazy or far-fetched to write down. When my husband did this exercise, he actually wrote down work at McDonald's, and we all laughed at him. We said, oh, you would never do that. And he said, if I was really stuck, I would do that. And we said, okay. Well, you know what? You could sell a bike. You could sell a car. You could sell a boat. There are so many ways to make money. So do that exercise as well, because it's very, very important. So I am going to sign off because I'm past an hour. Can you believe that? Now watch your emails. You're going to get homework. Get your homework done. Reach out to that realtor. Get that property under contract. Remember, you don't need to know everything. If you know the asking price, you can write up an offer. They're going to ask you things like, well, what date do you want for possession? What date do you want for financing remover? If it's a house, they're going to usually ask for a week, or want to give you a week. Ask for 2, ask for 3. I had many realtors say to me, you absolutely can't have 3 weeks. And I'd say, well, I'm not making the offer then. And they'd come back and say, well, okay, you know, or I'd do a week and then I'll ask for an extension. You know, it's not so much that you need to get this property and own it. We want to show you that you can get a property under contract and start working on investor money without need of your own money. So hope you learned lots today. Thank you very much for joining me. Any questions that came up that I didn't get to see, I'll answer them again tomorrow. So good luck with your homework. Ask any questions you have in the Facebook group. We'll love to answer them. Thanks, everyone. Bye for now.